for another weekly episode. Apologies, I'm a little bit late. I've got a story for you guys. So I fell asleep after going for 35 hours straight with no sleep, pushed myself really hard. So I woke up and was like, oh shoot, it's the Wednesday Wise Ball show. Slept like literally an hour in the last 2 days almost because I was pushing. And I'm here in my living room. But I was pushing really, really hard to get my place all ready for appraisal, for refinance. So we had a crew of some really great people, and I'm super thankful for everyone who came together to get this place done. We've redone this home, and it's beautiful. Like my whole place is just beautiful. So anyway, just sitting in my third living room here. This little fireplace in, built-in. There's some shelves going in. It's a big room, beautiful view of the waterfall and stuff over here. But anyway, okay, so what happened today? Rate hikes, crazy rate hikes, which we knew were incoming. We knew were pending. We knew it was something we're going to have to deal with. A little bit of a surprise here as far as people who are long in the market, bit of pain. It's one of those things where, days like today are not great if you're long the market, but can be great opportunities to buy into the market. So dollar cost average, slowly nibble in. As rates rise, we will see real estate also have several more opportunities to flourish and to, um, sort of be opportunities to nibble in. Are you short Bitcoin or ETH at all? No, I'm not short. I'm actually long, both Bitcoin and ETH. It's a shame. The thing is, my trajectory on that investment is one of longer term. And so I'm not really focused on the short-term price fluctuations, though I wish I had sold all my ETH and Bitcoin and, was able to dollar cost average in now as opposed to, when I bought in towards the high. But I've been buying in over the last year, and last year has been crazy. And that's when I've made a lot of my investments into crypto. So it may take, just like in 2017 when people bought on the upcycle, it may take a while before it comes back. That's okay. I'm not in a short-term time horizon for that investment. So welcome, by the way, everyone to the stream. Sorry I'm late. What else can I tell you guys? Oh, whoa, sorry. I just knocked my phone off my light thing here. Yeah, so behind me we have an 83-inch TV. It's massive. Like, I'll stand up and show you guys just how massive it is. That's me against it. Like, I literally couldn't even pick this TV. Well, I could. I moved it myself, but literally could almost not move that TV. So that's fun. I'm excited to watch some shows tonight. We got our movie theater all set up. Check out my Instagram. You can follow along for that. This project's been a massive one. My house is like, I don't even know, 7,500 square feet, 8,000 square feet total under roof. So it's a lot. Just to like paint it is a lot. Just to change trim is a lot. Just to, change flooring, all of that, right? All the things go along in a big place. It takes a lot more to do. So I'm hoping today's stream is short, by the way, because again, I haven't slept, been pushing. I had to get this appraisal done, and I set a date for myself. And a lot of things happen in life, and there's delays. And in the end of the day, it took longer than, well, it always takes longer than you expect, but it took longer than expected because we ran into some hiccups, and it's all done now. So it's beautiful. I'm happy to be living in a fully complete space. Even just little things like having just touch-ups and stuff on the wall is just, it's nice not to have them anymore. It's nice to be able to have a fully finished spaces. Okay. Hey Patel, how are you doing? Trista says lost 5K on miners. Yeah, it's the ETH merge happened, and at the same time we're in a bear market. And so in times of bear market, what the miners have to do is make a decision, depending on what their hydro costs. If they have solar set up, they might just keep mining. But at a certain point, depending on which location you're in, hydro cost, at least on peak during the day, reaches a point where it's too expensive or not worth it to mine the tokens. And so you just shut the machines off. All my machines are shut off. There's no, I guess there is still an argument you could power them up at night for the 12 hours of off-peak power consumption prices, in which case it would make sense. For some areas it doesn't make sense. I know most of Europe's gone offline for mining. So there are still use cases where mining can make sense. If you rent, as an example, and you have free rent, you want to just take advantage of your landlord. People are still mining, but the cost of the phone froze. The cost of the hydro, is quite a bit. So right now, it's one of those things where we just, a lot of the miners are just taking a break. Also, I think, in the next bull market, those machines will be valuable, so you could hold on to them if you want to. You could sell the cards off. It's a myth that they get damaged and that they're no good to gamers or engineers or architects. No, they have great use case. That was a myth propagated. If they're well taken care of and run properly in cool settings, there is no difference. In fact, actually, they're in better cooled environments and last longer than versus having that same card in a PC for gaming, as an example, or using it for a lot of other tasks. It can actually be more strenuous on them. So still very valuable. But yeah. The next question was, hey Mike, just passed my C2 on the real estate agent course, getting ready by the end of the year. Looking forward to learn from you. Thanks, Eric. Appreciate that. Yeah, so I think in Ontario now it's a 6-course program. I think that takes like 2 years through a college to be a realtor. That's wild. I found a loophole. I always like to find loopholes. So you guys want to hear the loophole that I used? I think I've said this before. No, I haven't actually publicly said this. I went and flew to Newfoundland, another province in Canada, where the requirements are much less strict, and you can take both commercial and residential courses with no time limit. So you can just back to back just crush those exams. They send you big textbooks and get licensed there, and then challenge all 6 exams at once in Ontario. So it was like I got licensed super quick because I went down there, I studied for those 2 exams, I crushed them, got like 90 something percent, came back here and took the challenge here, and then became a transferee into Ontario and did the challenge exam. And it was way faster than spending, like a year of my life in classrooms. And thankfully, I had a lot of knowledge already built up from, from already practicing in real estate effectively. And then I was already doing deals. I'd already bought a lot of properties off market. I'd already, bought and sold many properties myself. I'd already transacted in assignment fees and assigned properties. So for me, it was like most of the realtors starting out knew less than I did, even after completing all their courses, right? Before I even started. So I was able to leverage a lot of that, but the technical jargon and the stuff you never use or that's useless in actually making money in real estate, a lot of procedural stuff that's just, I still think is a waste of time. But I get it, it's there to protect the consumer, and it's all about protecting the consumer, blah, blah, blah. But then again, every single realtor is just there for themselves. You meet all these realtors and they're all just, a lot of them are scuzbags who are self-interested in their own commission, which is fair, it's their job and whatnot. But a lot of things are written to assume the agents are predatory and that to protect the customer and all this kind of stuff. So there's a lot of nuances and procedural stuff you have to do, which I'm not a fan of, but is part of the game. I'm not doing any mentoring right now, but I appreciate that. For people that I do mentor in my life, it's people who have come into my life and provided some value, and that we're both getting enjoyment and reward out of it. So yeah, right now I'm just not taking anyone on. It's a lot of time investment on my part. Price predictions for ETH after the successful merge. Well, I still think ETH's going to the moon at some point. I don't know when. We're going to a bear market, and the Fed tightening is creating strain across every market in terms of liquidity. So crypto projects, fintech startups, the tech growth, any business is having trouble, even real estate is having trouble raising capital right now. And so when capital markets, get even tighter and tighter and tighter, and there's less and less liquidity, when bond yields are 5 or 6%, it's then a bit more difficult to raise capital for projects, as well as just there is less capital. Let's not forget that 1.5 trillion market cap has been wiped out in the financial space, another trillion, more than a trillion in the crypto space, and a couple trillion now in real estate. So we're losing trillions of global value. Money is gone. The government isn't printing. M2 supply is not growing as rapidly as it was in, say, 2020 or 2021. So the gravy train that created this inflation problem that we currently are tackling, it is also going to now to stop that. Everyone's used to getting free money. At the same time, that's going to create basically a recession. And then we'll go into that recession and there'll be lots of opportunities. This will be another once in a decade opportunity, potentially once in every 2 decades or 3 decade opportunity for you to become a multimillionaire, for you to get in and take down deals at great prices. So I see this as an opportunity. And yes, it's painful, but it's an opportunity. Oh, I closed on a cottage today too. After a 32-hour workday, had a great appraisal on this house. I'm hoping it comes back, strong. I think it will. I looked at all the comparable data. I looked at, all the data points, and it seems to me that it's going to come back very, very well. But I closed on my cottage today, which I'm excited about near Grand Bend. It's the second property in that area. I've also just locked up another property, super excited about as well, with effectively a double or two beachfront lots that are right to the water. So beautiful cottage, a lot of potential to build like a bunkie or a garage. So I'm excited to flesh out those opportunities. So for me right now, I'm still buying. I'm just being very cautious about it. I'm looking for a great value where I can get in there and offer, a number that works for us and works for, the hopefully can work for the seller. Ideally, you want it so the seller walks away feeling like, I should have got more, and then you walk in there feeling like, I could have maybe negotiated a little bit more. That's a win-win negotiation, right? It's even better, I guess, when you get a deal that's so dirty that they feel bad signing it, but those are very, very rare. Of course, every seller wants more. But yeah, so that's what's been up in my world. Just getting this house looking beautiful. Where's the silver? I don't know what silver, I don't know what that even means. Are you still bullish on crypto for the long term? Yeah, I mean, for the long term, I think that it's a great investment. Bitcoin miners are getting close to break even. I think that point when Bitcoin miners, for some of the locations where there's higher hydro costs, become not profitable, that's when I want to step in and start buying machines for the Bitcoin miners were, I think, going for it. Well, depends on the model, but some of the bigger, terahash miners were going for 10, 12, 14 grand, very strongly tied to the price of the underlying asset that they're mining, which is Bitcoin in this case. And as profitability drops to break even, I still think there's a business case for it, in the sense that one, you're mining tokens, and those tokens, though not worth a lot now, will be worth a lot later. So there's that. The other thing is it's an active business. So you can imagine running a Bitcoin mining business that was losing money, but you're getting tax deductions. So those losses can carry forward into other businesses in other areas. And if you had, for instance, if you were to get those tokens and run your business at, say, an operating loss, that's okay, because you get a tax credit for the future, which is great, or to offset other expenses you might have. If you're doing it personally, then a couple of Bitcoin miners could easily, if you're losing heavily on those, could easily provide you some tax offset. And then you hold those tokens, and when they appreciate, you get a preferred tax structure, because capital gains on assets and securities like Bitcoin, it's arguable if it's a security, but it's treated as a capital gain in the same way if you sold a property or a security, and half of it is tax-free in Canada. So your capital gains tax rate is much lower than active income tax rate. So you actually want to mine now, ideally at a loss, and then have those tokens appreciate significantly. It's, from a tax structure, very advantageous. There are, of course, all those people who are mining to offline wallets and they claim nothing, or they claim half of it, or whatever. I hear all these crazy stories. I'm not going to recommend any of that. It's tax fraud. Don't do that. But there are some really creative tax reasons why you want to do it. But the underlying machinery itself has value, and we're getting close to some of these miners selling at below the cost of the hardware itself. So that's interesting. When you're literally paying no premium at all, that can be interesting. There's intrinsic value there. So that's a business that I'm interested in acquiring, and I hope Bitcoin tests below 15,000 USD. So a lot of these big farms go underwater. I'd be interested in acquiring one, because I think that long term that token will do well, and I think that we know that Bitcoin's proof of work, and so it's a real opportunity for someone to get in there and acquire a nice sizable cash flow business. Again, you could convert daily to USD or to Canadian, whatever you want with your miners. It doesn't have to stay in crypto. I would, at this point, stay in crypto and cash out, when the crypto is doing very, very well. But of course I like miners. Is it, going to be a large percentage of my net worth? No. Don't bet the farm on this, guys. You guys know the buckets I think are important. I think you should have a stock portfolio. I think you should have a real estate portfolio. I think that you should have, maybe a little bit of lending that you do. I think it's important to also have, all of these buckets need to be filled. And so there's lots of different asset classes you can hold. Even 5% of your net worth could be in collectibles, precious antiques, or I like gold and silver as an option too. So you have some of that in case something ever happens. You've got gold and silver um, to fall back on. So yeah, there's lots of different asset classes you could explore. Buying businesses, I think, is one of the best active businesses that you can put the time in and get extraordinary returns. That's attractive, in my opinion. So those are opportunities that I'm looking for in this market. Let's do some Q&A here real quick. Now you get some food. Odds on Putin nuke, and where do you see Europe, Germany, UK if energy prices go 10x year-over-year cost? So Como, I think there's a real possibility that we have an energy crisis this winter, and inflation isn't going down as fast as they thought. It's not transitory, and that we're battling this for the next 6 months. My hope, well, either way, it's kind of shitty. So if the Fed fails, we have hyperinflation. It's insane. We don't want that at all. It crashes the whole economy, and salaries can't be relied upon, and things grind to a halt. On the other side, though, the Fed's like, the Fed's stance in most developed nations, and especially in the US, is we need to be hard, and we need to raise rates, and we need the people to take us seriously, that we are going to get inflation under control. Under control means they want it to be 2 or 3% a year. 3%, your money is devaluing 3% a year, compounding against you. So a $100 bill after 50 years is like worthless. Wipe your ass with it. That's the goal of currency, right? So it's not scarce. They can print as much as they want of it. It's completely tied to their economy. Hopefully they print less than the growth of their economy and the efficiencies in their economy. Some years they do. In fact, this year, well, it depends. If we go through a market contraction, then they would need to contract the money supply, which they aren't doing technically. They're still stimulating, but a lot less than they were, and that's good. And they're tightening on rates. So if that happens, they'll put us into if they continue to tighten on the schedule that they're on, it will crush demand. People won't be able to buy houses. They won't be able to qualify. And even if they can qualify, they won't be able to make the payments to actually afford it. They won't be able to afford to renovate their house. So contractors get laid off, and like all these companies will have ramifications, right? Tech can't raise money, so they're going to lay off half their staff in San Francisco. So then house prices will fall, and the whole economy will tank because people don't have a job, they don't make good money. So there'll be ramifications all the way down or as a result of what they're doing with the tightening. But that's what they want, to reduce demand to a point where prices have to fall, and businesses are getting less volume and revenue, and so that's one way to get inflation down. There are other ways to deal with inflation, but we've had a lot of cheap money for a long time, and they've been stimulating and printing for too long. And I think this is the right path forward. It just won't be easy. It will be painful, and it will be opportunity for those who have liquidity and for those who are, wanting to take stuff down. So that's part of why I am looking for, like, if you're watching this right now and you have like $1 million and you want to partner up, that's something I'm interested in. You have a good capital base. I'd like to take that over the next 5 years and double it. And if I did that with 5 people, say 2 million a piece, we take 10 million bucks, we buy 30 million bucks in real estate at a discount, under market value, with very, very low, if almost no cash injection, because the properties will be self-sufficient. Hold them over a 5-year period, renovate them, fix them up. Some of them will flip. I think if there's an opportunity to exit on a deal that's got great arbitrage value, then that's huge, right? So, but if I do that with my money, sure, I make a few million bucks. Who cares? If I can do that with like a bunch of partners' money, or like ideally a couple of partners, I don't want a lot of partners. That's shitty. Someone called me like, hey, I have 200 grand to invest. I'd be like, I'm not interested. It's not worth the time. But for me, I think there's a lot of value there. Hey, buddy, look on camera. You guys ever met my dog? Milo, come. Sit. Sit. He's a good boy. Look at him. How can you say no to this guy? He wants his dinner. He says, Daddy, I'm so hungry. I just want dinner. Oh, he's a good boy. Oh, he's a good boy. He says, I just want fire. I don't want to have to work for it. Just put the food in my bowl. I want that UBI. He's laying at my feet now. He's a good boy. He's a good dog. He's half retriever, half poodle. So he's hypoallergenic. Okay, next question. He's a good boy. Oh, he got out and he's got burrs on his neck. Oh, on his ears too. I have to cut those out. You bugger, you got in the field behind the house, didn't you? Okay, nuke, the other part of that question, I can't speculate on that, but I don't think we're gonna have a World War III nuke. I think there'll be threats of that, but someone else says, I don't think nukes will be used, but Russia is leaning to go full scale. NATO is also ramping up arms production. You know what? It sounds dirty, but war is actually a great way to stimulate the economy. It's one of the preferred ways for governments to, I don't want to say print, but like force themselves out of recession or horrible times. When people get into hard times, they get backed up against the wall and they want to fight. So unfortunately, I think a war is one potential way in which we beat both inflation and um, sort of stave off a global recession, or at least some national recessions. Some countries will suffer. I don't know. Uh, okay, go to the next question here. Where was I? Lost my spot. There we go. So Varun says, hey, Mike, one of the properties is struggling. So his property's struggling. Sorry to hear that. I've had it vacant for a while, but having trouble finding reliable LTR, so long-term rental tenants. Would it be a bad idea to sell this house in this market? So the question is, I guess I have for you, is why is it vacant? We are in the hottest rental market we've had in a decade. Rents are up 29% year over year here in Ontario. They're moving 3 to 4% up a month. That means if you rented an apartment last month for $2,000 a month, on average, that apartment is now like $2,080 a month. So we're having insane increases. By waiting to place your tenant, you actually may have made more money and made your property more desirable and more valuable. That's insane. But like literally having your property vacant and choosing to rent it at the top is much better than being locked into a tenant at a lower rate. Because again, we have inflation rent controls effectively here in Ontario. Another reason why I do Airbnb, why I like to focus on the vacation rental space, I don't want to be locked into a long-term tenant. I don't think that, I just don't like being in the business of providing necessary housing to people who are struggling to afford it. It's just, it is a business, and it's a great business in the sense that like, it's so easy to find a customer. You post your unit, if your unit looks nice, you post it for rent, you act as a reasonable landlord and do all the things you're supposed to do, and you get a guaranteed customer for a long period of time. You make cash flow every month. That's one thing I liked about it, is there wasn't necessarily a huge sales aspect. Renting out a unit is not that hard. If you post a unit right now at a desirable price that looks nice, you'll get 20, 30, 40 applications. You can pick your best, or just hire a property manager to do just that and pay an expert to do it for you. But make sure you vet the property manager's process and review the application before you approve them signing a lease on your property. That's really, really important. A lot of property managers are just looking to make a quick fee, and they're not invested in whether that tenant succeeds for you or not. So they could just put in any Joe Blow. They don't care. They get paid. There's no downside for them. I like property managers that are willing to put the downside up. I've had property managers come to me and say, hey, if there's a loss, I'll come out and I'll cover that difference, or I'll replace the tenant. And that's what you want in a good property manager, is someone who's going to be invested in that and making sure that the results of their poor decision would be pain and loss for them. There needs to be a downside. And I think that's the problem with hiring people on fee-based in property management, or hiring people, on revenue basis. Because if you have a huge loss, if there's a water leak because they place a shit tenant that breaks a pipe and it's $2,000 for you, you take $2,000 loss, they take nothing. That's shitty. Another reason why I like partnering, by the way, guys, as opposed to, trying to go it alone, is that sometimes you end up saving more having that expirational, I guess, what do you call it? Like, trusted expert, like expertise, mastery, that adds a layer of value to not only acquiring the deal under market. I think that's the most important thing. Of all the 3 levers you can control in a real estate deal, right? You've got your ops, your people, your money, and your deal. People think money's important. Money's easy to find. If I go find a house right now for you guys at $500,000, it's worth $1 million. And I say that to you guys. I have a house for 500 grand that's worth $1 million. Someone will fund it. Money will always come. Even if I was a shit operator and I had no experience at all, if I had a property under contract that was worth $1 million and I had it for 500, the money would just flow to it. If you get the word out there, money will come. So money is the easiest, and people think it's valuable. It's not value. It's like maybe a third of the value. And then the operational expertise is a third of the value. And I think then the people expertise too, right? Having put deals together and run that whole project management piece is valuable. And the deal itself, I think, is always the most valuable. So if you're not good at finding deals, get good at finding deals. That is the place you make money. On day of closing, you should make money. If you're not making money on the day of closing, don't buy it, period. So if it's on MLS and it's not a great deal, you're paying at market value, it comes in, it's a you don't even need an appraisal. You should be able to conduct your own appraisal to know whether the property is worth it, using comparable analysis, using net operating income to judge the value of the property based against other properties in the area. So the income should be comparable to other properties you're getting in the area, and there should be an upside on closing immediately. That's the kind of deals I want to get involved in. Same in business. Like, I don't want to be in a business where I have no competitive advantage. You have to develop a competitive advantage to succeed as well. It depends on your goals, I suppose. So if your goal is like you're a doctor or you're like a techie and you just work in that field, you make 250 grand a year, you don't want to be dealing with toilets and leaks and all that crap. You may want to partner up and go passive. You might want to do a REIT. You might just want to buy your property and just have it and hold it for 25 years. Who cares, right? Like, you're not looking to necessarily make an active business out of this. Fine. Like, wealth is still preserved very well in real estate, and it does grow nicely. So there is a lot of value, I do think, to that. But the way I like to do real estate, and I think the only way you could justifiably, reach out to partners is to bring some sort of value. And ideally that's on the deal side. That's where there's the most value. And by the way, I sometimes act as money partner too. So if you are the active version, like the me, but you have deals under market value, reach out to me. I'll happily, if you have a great deal, you just, hey, I have a $500,000 property worth $1 million, I need it funded, and we can verify that, like, there's no shadow of a doubt that it is a $500,000 property worth $1 million. Not $500,000 property worth $650 and you're trying to stretch the comps, and maybe in March it was worth 800 and you're, no, like properly worth that, 100%, and it doesn't need a huge renovation, or including the renovation, there's still a huge spread. Call me. I'll happily find your deal. Like, if you think that's a limiting factor for you, it's not. I can help you find the money. I'll be the money, worst case, right? So call me. If you're really good at finding deals, call me. You guys know how to find me. rosehartcapital@gmail.com. It's the best type of property, cash flow. Again, and if buying my first, it did. So first part of that question, Omar, there is no necessarily best property, right? Like, you could be a single family house buyer doing the boring strategy with negative cash flow. I don't think that's the best strategy. It's a great wealth preserver. It's a great wealth, grower with some leverage attached to it over the long term. In the short term, yeah, it's, it depends. So I like cash flowing strategies. And if buying my first property, do you recommend looking for cash flow or growth? So it's your first property, I would say cash flow is so important. If it's like property 10 or 15, you already have a good cash flow base going on, or you don't need cash flow necessarily, that's when you look for like value on purchase, rehab, looking for opportunities where you could sort of burr it or flip it. That's a great way to, sort of, if your whole focus is to build wealth quickly, and that's a great way to do it. It requires a lot more time to apply a strategy like that where you're buying distressed properties. There's always the multifamily strategy too. You can do a more aggressive strategy where you're changing out tenants and all that, or you can do a less aggressive strategy, just buy turnkey and optimize a few things here and there. Both ways work well for building wealth. What you don't want to do is just, buy like a crappy single family and have it be negative cash flow, overpay at the top of the market. We're now into a trough, so like, I can thankfully say you're not buying at the top of the market. That's a guaranteed you're not. Are we at the very, very bottom? I don't know, but it's a decent time to buy. If you're going to buy, let's say your goal is to buy 10 properties, start now. Buy your first one now, because it's for sure a 25% discount. Could it be a 35% discount later? Sure. Start buying. Buy another one, 35% discount. If it gets to 40% off, buy another one, right? That's my philosophy on the matter. So yeah. What type of property? It depends. I've always liked the tried and true duplex, triplex, like nice and easy, because there's so many exit opportunities. You can sell it to someone who wants to house hack it and live in it and have a mortgage helper. You can sell it to a large firm. You can sell it to an investor. There's so many exits, right? Whereas like with a commercial property, it's so tied to the net operating income, which is great too, and basically just attracting an investor. You said that one option. So I've always liked the smaller properties, but you make so much more on the bigger properties. So for the same amount of work, often just at scale. So I need to start doing bigger deals. It's something that like is in my journal book. I'm like, hey, I need to start taking down bigger deals. My, no more of these 4plexes, 5plexes, 6plexes, no more of these like small $1 million deals. And you're doing like 3, 5, 7, $10 million deals. I can do the exact same thing I'm doing now and just negotiate, but at the same percentages. So instead of making 30% on $1 million, which is 300 grand, now I can make 30% on 10 million and make 3 million bucks. 3 million sounds way more attractive to me and gets me out of bed more than 300 grand. It's like, that feels pompous and like arrogant or something, but honestly, 300 grand doesn't even, like, I'm not even, I'm excited about 300 grand, but 300 grand's like, if I won 300 grand in the lottery tomorrow, it wouldn't change my life at all. $1 million in the lottery wouldn't change my life at all. $2 million wouldn't really change my life. I need like a $50 million lottery winning for it to really be like, wow, I'm going to change my lifestyle in some way. So that's just the stage I'm at, I guess. Everyone's in a different place in their journey, and that's okay. I've been in all the places along the journey where I was broke and like $10,000 would have changed my life. Anyway, Mr. Frugal says, your thoughts on Russian ETFs moving forward? RSX sold its depository receipt at a big loss last spring and now saying 84% cash. They basically materialized losses at the worst time possible. Yeah, I know it's shitty. I am still long-term bullish. The problem is that NATO doesn't want you to own their securities. I think that there are opportunities to buy. It's just, yeah, it's a challenge. It's if anyone knows any great ways to invest in Russia, I think that there are opportunities there to invest in the largest country. I think technically by landmass. I think it's larger even than, yeah, Canada's the second largest. They're the largest. Huge population, way bigger than Canada's. Well into the 100 million population range. They're a powerhouse, right? To not invest in those equities at all is to miss a large percentage of global wealth. Why? Just because NATO says sanctions? Like, what? It should be a percentage of your portfolio, same as China should be, the same as, the US should be, the same as, weight the countries based on the size of their market cap and have a balanced approach that invests in all countries. That's just prudent to diversify. What if one gets wiped out? Then you have, what if Russia wins? Then you've got a little bit there, right? What if they lose? Who cares? It's a small percentage of your portfolio. You want to be diversified. Do you prefer flipping or renting? Both, for different reasons at the right times. So it's hard to say one over the other. But for me, I think there's, I should charge my phone. Here we are. Wes Dizzle says, hi, my house looks great. Good luck on the appraisal. Thanks. Raz says, how much lower do you think house prices will go from the highs in February? So Raz, I think here in Ontario, we will see a 50% decline from February highs. So if you bought a house in February for $1 million, I think it'll be worth 500 at the low. We are currently at $1 million house being worth about 700 right now. So we're getting close to that bottom. We're more than halfway there on this drop right now. So there will, I think it wouldn't be a bad idea to dollar cost average in, buy a property now. You can not have to negotiate, you don't have to battle with anyone, which is great. So there's lots of opportunity to negotiate. B says, what do you think of all these multifamily syndicators who have been making big profits the last 5 years? Will most of them crash and burn in the upcoming recession and lose investor money? Yes, many of them will. Yes, many of them made a lot of profit, and hopefully they've taken that profit and separated it from this business decision. So they might not say, hey, we've got a whole bunch of profit from before. Who cares what decisions we make now because we have all this money? Don't let past decisions totally dictate what you're going to do in the future. So some of these firms, there was a lot of these big firms that are raising money just for speculative investments. They're buying big development land plots and building buildings with no upside. Like they're paying maximum dollars to builders to build like high-end, condos and shit. And those projects in recession times can't raise enough capital to get completed. And in high inflation times, the price of these condo builds, or say it was 100 million and then it became 120 million, then you're in a situation where, what do you do? Who's going to eat that $20 million, that extra 20% cost? Well, at the same time, the ARV was, say, 130 million on that condo project, and now it's 100 million. So you're building for 120 million, and the building's worth 100. A lot of people are going to walk away on those scenarios. For me, I'm a long-term investor. If I committed to a project, I would finish it. But on these big projects, a lot of these people aren't. And the capital dries up, and these projects sit, and once they sit, it starts a chain reaction, and things kind of crash. It could get nasty. It's not a great time to sell. I have 3 triplexes that I still have to sell here in London. They're going to be probably sold to house hackers. Someone who wants to live in like the guest house in the back of this property and rent out, like the main 2 units in the main house. That's the kind of target buyer I have for my properties at this point. Investors with rates where they are, honestly, my properties are nice and special in a way that like they don't have the same cash flow like a shitty property would have. like a shitty student rental or something. This is more like someone who wants a really nice property in their portfolio to hold, it's quality. So I'm going to exit on those. I'm getting to a point though where I'm going to take them off the market, I think. Well, two of them are off market already, but take them off the market to the point where I think that I don't want to sell at the bottom. So I can hold. I have staying power, and my properties, they cash flow positive. So it's like I don't have to sell. So yeah, that's where I'm at. I do some lightning around here because I am hungry for some food. We also have the problem where countries that owe in USD can't afford a strong dollar. It's going to be a bloodbath, and think that Brazil, Russia, India, China, South America drops the USD. The USD is at all-time strength. It's the worst possible time, and I plan to convert a whole bunch of Canadian to USD, and it's the worst possible time. And my futures that I had contracts protecting the right for me to convert have all expired, and I didn't renew them. It's because things are crazy right now. The premiums were insane. So it's shitty. I'm hoping that the Canadian dollar gains some strength. I think that the Canadian Bank of Canada is, being as firm and strict as the Fed, and so that's good. I think if they continue to do that and beat inflation, and it would be nice if we had new management. I would honestly like to see Pierre Poilievre take over Justin Trudeau as Prime Minister. That would be great. I would like to see them exploit the resources that we have in this country and optimize and use the things that we have in Canada and make Canada strong, as opposed to just immigration is like his plan. Like, let's just take in a bunch of people and like it'll be fine. And we'll not explore the fact that we have all these beautiful forests and oil, and we have a lot of great things going on in Canada that Canada could be managed much, much better and could be a very, very strong dollar in the next 20, 30 years. The population could easily reach 100 million. We have a huge country, I think the second largest in the world next to Russia. And we're a better country than Russia for sure. Topographically, Canada is way better. We have like beautiful like BC. We've got our landmass is way better. We're not like Siberia, you know what I mean? Like it's just a nicer overall country, in my opinion. A lot of fresh water, a lot of great things going on for Canada. So still bullish on Canada overall, the Canadian dollar overall. Where do I think Bitcoin's going? Down, but then eventually up. How do central banks remove liquidity, i.e. money from the economy? Do they destroy it? So they could. They do have the ability to pull back. So through the banks, they can issue bonds basically and create money supply. If they were to stop creating money, no, not putting you out yet. Chill. Sit down. Oh, Milo, he's a good dog. Hey, buddy. What was I saying? Lost my train of thought here. Talking about, what are they talking about here? Central banks control liquidity. Okay, so the M2 money supply. Basically, so they have many different levers, but effectively the Fed can print money to the point where like they could say, hey, we're going to stimulate everyone, give everyone a check for $1,000. That would be them effectively creating or adding money. But without growth to the actual economy, that printed money, if you increase the money supply and the economy doesn't change at all, if you divide the GDP of the nation, right, by the money supply, you'll get the true intrinsic value of or behind those dollars. The dollar is no longer backed by gold, it's just backed by the power of the economy, right? So the Canadian dollar is backed by the power of the Canadian economy, the US dollar is backed by the power of the US economy. Well, quiet boy. Oh, my dog. Next question was, do you have experience with mixed-use property? Some, like I bought a laundromat and a little bit. I have done some stuff. It's getting really hard to get financing. So we know we're at the bottom when it's almost impossible to get financing. Just remember that, guys. The worst, like the biggest pain in the ass is that the time you want to buy the most, when things make the most sense, it will feel like nothing makes sense. No one will be buying. There will be absolute pain in the streets. Nothing will make sense to the point where like you call lenders and no one wants to fund deals. There's no liquidity. That's when you want to be buying. The shit part is that no one wants to be lending at those times. So that's how you make a lot of money in this market, is finding lenders who will work with you through this time, finding partners who have cash and bringing value to them so that they partner with you. If you're one of those people, reach out. Either or, like if you want me to be money partner or you want me to find you deals and we partner up on them and you bring money, I'm also cool with that. some sort of hybrid in between, also cool with that. Varun says, thanks for those good call outs, Mike. It's mainly because it's a low income area and none are getting through my vetting process 3 times income. There you go. So it's good to be, especially in communist Ontario, where the landlord tenant board is like ruler of the communist nation, and basically landlords always are doing wrong and the landlord should always be doing more, and the tenant is always right, and even if the tenant's wrong, we'll give them a year to like not pay rent, it's all good. Welcome to Ontario. It's not a very interesting prospect, and you have to be very, very careful in this market to rent to great quality people. So just keep posting your ads, work on some marketing strategies to get those out there to more eyeballs, maybe better pictures. Maybe your unit actually just needs to be spruced up in some way to get the rents that you're looking for. But at the right price, you should have a lineup of good quality tenants. If you have a good quality property and it's marketed well, you will get lots of good quality applicants sending in their way. Especially in this market, you'll have your pick your tenant. What's your take on Airbnb for the next 12 months? I like cottages. I acknowledge that in times of recession, people cut back, but the average person is still going to go on vacation. So instead of going to Disney World with their family, they're just gonna, 3 families get together and rent a cottage. And instead of the cost is half as much. And I think that they'll do a staycation as opposed to going out. So I am still bullish on the cottage properties. I like waterfront because there's only so much of it. It has some real great value. It's also just lifestyle wise, an investment class I like to be involved in too. It's like, I just like dealing with that caliber of people. I like dealing with someone on their vacation as opposed to dealing with someone who's like a single mom trying to pay rent. Like, you know what I mean? Like it's a different caliber of business. So I prefer to be in the short-term rental business as opposed to being in, I prefer that clientele. So yeah, I am looking for an operator, by the way. If you guys know anyone or you are one and you're a great Airbnb operator, reach out to me. I'm looking to partner up and do a in-house, I want to build a Airbnb management company and I want a running mate. So I could provide deal flow and that sort of thing. There's areas I could lean in strategically to help it run efficiently, but I don't want to be running the day-to-day. So if you're that person and you're a great Airbnb operator and you want to scale up, let's chat. That's something I'm interested in. Yeah. My vision still is like, for me, real estate investing is about building wealth. Yes, it's about growing my wealth and it's about preserving my wealth in a way that I can't do in the stock market. By the way, my stock portfolio, I'm still shorting the market. So I continue to now outperform the market. I love the market's dropping. If we test June lows, I hope we break below them. We're working towards that. I will begin going long. I continue to buy into the market long, slowly. I think that there's a real opportunity here to get in. I wrote it down the first leg of this year. I recovered entirely from the mistakes I made trading before last year. I was back to break even, all good. And then I invested in tech and crypto and a number of spaces that just got decimated in January, February, March, April. And I, to make matters worse, sold off 10 properties this year. And those 10 properties, I poured that money into the market as well at the worst possible time in January. So there's that too. Timing wise, I had a horrible experience. Thankfully, I have hedges. And so as the market moves down, say the market moves down 1%, I move down 0.1%. Market moves down 10%, I move down 2%. So I'm down, but I'm down a lot less than the market. And so that's an opportunity for me now to go long and to dollar cost average or DCA into the market. Bum, bum, bum. Do you think people will just stop selling their homes? So no, there will always be people who need to sell or who want to sell, regardless of market conditions, will sell. Sure, there are some people who have a lot of equity in their home who don't need to sell. There will always be people who are motivated to sell. And when there's no buyer pool, then you can get in there, you can negotiate great deals, great terms on those deals. It's just a good time all around. But my next 12 months, Quentin, I think that there's a lot of opportunity in that space, in the vacation space. I'd rather be in that business. Even if, and I think there's opportunity to make more money long-term and it's a better store of value, but even if it wasn't, I still think that owning a business with that kind of clientele where like, I just want to go, it's just more enjoyable to go check out my property on the water, to go in Florida and check it out, go to the Bahamas, come back to Canada on the beautiful Lake Huron. It's the nicest water in the world, clean, beautiful, fresh water. Just closed today on a property that's literally walk right down to the beach. Is beautiful. In the summer, there's no better water. Now in the winter, Canada is horrible, and so it's you want to shift to the Bahamas or Florida, and so you have a season. There's always a hot time. Have a portfolio that's always got a high time at a different time, so you have strong cash flow all year round. Because in the slow season in Canada, you're bustling in Florida or Bahamas, right? So that's what you want is a business like that. I think it's a lifestyle business that fits my goals, and so I like it as an asset class. I like it better than dealing with the and I'm okay. I think there's nothing wrong with that strategy, by the way, of dealing with like the lower class tenants and sort of providing a basic necessity for them. I think it's a business that is necessary. I invested heavily in that business to build my wealth now. I just don't enjoy it as much. I'd rather have a higher caliber property and deal with a higher caliber customer. I'd rather move up the chain. And there's also potential for higher margins because the rich are really rich and they don't cut their travel. If your net worth falls from like, let's say $100 million and it drops to like 70 million, like shit, you lost $30 million. That's a lot of money, sure. But if you're ultra rich, you're still gonna go on vacation to Florida. You're just still gonna go to the Bahamas. You're still gonna rent a cottage for $4,000 a week, $5,000 a week. You did it last year, you do it this year. It doesn't impact you largely, right? You have a lot of cash reserves. So if you target to the richer person who has 2 million, 5 million, 10 million, 20 million, you service that space, people are still going to vacation. There's, you know what I mean? Like there's still wealth there. And I don't think it's good to target the bottom vacation rentals. They're not great. No, sorry. I like the bottom vacation rentals because everyone needs to travel. The mid tier is what you don't want. You either want to be luxury or you want to be like a more affordable vacation option. Those will always do well, even in times of recession, I still think. So, yeah. What do you see happening with the future of private property rights? I mean, if we're going to own nothing and be happy and all that. So you're talking about the Great Reset stuff. To an extent, yes, but no. Is it going to stop me from buying real estate and owning stocks and stuff? No, I'm still going to continue to dabble in that game. I don't think that, or I think that's why it's prudent, by the way, to invest in Costa Rica, Bahamas, Florida, Canada. Don't just be in one place where they can take all your eggs in that basket. Have baskets all over. Have a second passport in Costa Rica. Have a residency card in Bahamas too. A 10-year residency permit lets you come and go. Maybe have an E2 visa in the US as well if you want, right? Like have those flexibility while having a Canadian passport. I think Canadian passport and the Costa Rican is nice because both don't tax you if you don't make money in that country. And if you leave Canada more than 6 months a year, you're still a Canadian citizen, but you're not a tax resident, so you pay no tax. You can, in theory, live in the Bahamas, whereas 91 days a year to live in the Bahamas, is my understanding, and pay no tax, file no return. If you're a tax resident in the Bahamas, you don't even file a return. Nothing. No reporting. All good. Personally, do what you want. $1 million in Bitcoin, it's worth $1 billion over time. It appreciates. They don't care. No big deal. Don't report anything. That's nice, right? You can still be a Canadian passport holder, just you lose your health insurance, or your health benefits, I guess, that you'd have in Ontario, but who cares? Like if you're rich, that's not a problem. The tax savings, not even if you're rich, if you're middle class, the tax savings more than outweigh any amount of cost in setting up a trifecta like this. But I like Costa Rica as opposed to Bahamas. To get a passport in the Bahamas, you have to give up your Canadian passport. You don't want that. I think the safest place if like shit went to hell between East and the West, I think China and the US are economic rivals and at some point will clash economically, hopefully not physically like with a real war, but maybe an economic war as China begins to overtake the US as a GDP economic powerhouse. So there is a potential for conflict and it'd be nice to have somewhere in South America. And I think the best place if you were to look at everywhere in South America is definitely Costa Rica. The vibe is just really nice there. They have some really great tax laws and they have some really great second citizenship opportunities and they have free healthcare, which is kind of cool. So yeah, they're in the top 20 in the world for healthcare, which is kind of cool. Congrats, that property is close to the water. Sounds exciting. Where is it and how much did you get it for? Oh, so I'll share something else. I actually locked up a property. I can't say the price. I don't think I'm allowed, but there was a property on the water with 2 lots that owned to the beach. I just locked it up. I might partner up. If you can get financing on this, if someone's watching this and they get financing on this and if you'll commit to me that we'll do 5 or 10 deals, I'm not gonna do a one-off deal. I would offer up this deal that I have under contract. I put in an offer well over $200,000 under asking, and it got accepted. And it's a beautiful property with a lot of potential. Let's chat offline about that. It has amazing potential to, if a severance was ever possible, you could literally just sell the cottage and the house and get the second waterfront lot for free, or sell the lot and get the 5-bedroom cottage on the private beach deeded to the water with your own private beach for free. So, and by the way, in this area, there are no cottages under $1 million. 0 waterfront cottages under $1 million. And this one's under $1 million. So it's a twofer. So cool opportunity. I'm excited for it. I'll just take it down myself. If I don't get a partner on it, I might partner up. I'm noodling with that idea because my capital is very precious right now. There's so many opportunities to chase that it can make sense to partner. I'm not closed off to it, but it's got to be the right partnership. Otherwise, just keep doing deals. We just took the deal down in Sarnia, just took another deal down here in London. The cottage, I 5 deals in the last month. We're buying again. And I didn't buy, by the way. You guys know I stopped buying like August or September of last year. I was like, valuations stopped making sense. And I started screaming from the mountains, it doesn't make sense, stop buying. And the prices just mooned into November, December, January, kept going crazy. February was like, holy, market's up 30%. Like real estate was just insane. And people were just paying anything to get a house. And it was like, whoa, this is not good. Don't buy this. Pump the brakes. If the numbers make sense in your deal, okay, buy it. But don't just rush in. And then what happened is in March, things started to crash and people pay at the top of the market. And now they might have lost their entire down payment, unfortunately. That's where we're at. Como says Argentina has mortgages in the 50% range. Could probably own city blocks for $1 million. If you had cash, totally true. Yeah, there's a lot of countries right now going through hyperinflation. You got to remember that the strong US dollar is crippling a lot of these developing countries who rely on the US dollar, and it's just so expensive they can't afford to buy it and pay debt in that currency. So it's scary times, it's important to be careful what to invest in. And that's why diversity is so important in everything that you do. And if you can apply an active edge, like I've been able to do in real estate, like for me, it's so hard to want to invest in stocks, even though it's great. I will always have a stock portfolio. I should be allocating more. Like I have more than half of my wealth is in my stock portfolio. And it shouldn't be the case because I have no edge in the stock market. I'm beating the market right now, but how long will that last? At some point, I'm just going to buy into the market because I don't know better. I'm not smarter than the market, and I sure as hell can't beat the hedges and the suits. The guys who spend 80 hours a week with teams of people. There's no way I could outperform those guys. I don't put in the time. I don't put in the legwork. I just can't. Trading at home on my computer by myself, I don't have macro edges and micro edges that they do, right? So I'm better off just buying the entire market and letting it ride. But in real estate, I have an edge. I can go buy grandma's house for half off. I can call a bunch of wholesalers and call a bunch of realtors, and someone will call me. And yeah, he's over here chilling. Yeah, go boy. Yeah, he wants EVI. Well, he's like, Dad, you're fire. He's like, I'm part of this family. We're all fire, you know? I gotta make him put in the work. Good boy sometimes. Okay, I'm gonna wrap this stream up. It's been a great 53 minutes, but I'm exhausted and I've had like no sleep. So I get some food and then at some point I'm gonna go to sleep. So anyway, thank you everyone for watching tonight. It's been a pleasure, as always. If you want to connect, you know where to find me on Instagram, on Facebook, my email. Anyway, the secret to unlocking wealth through you, 3 levers. You're in control of your financial future. Spend less, earn more, and maximize returns in the difference. All right, everyone. Have a good night.